Well, I mean, I think a lot of the developed world, if you're talking about Europe and Japan, where you have, this type of debt situation, although at least in Japan, I mean, they're still a creditor nation. Europe as a whole, if you look at all the European community combined, it's a net creditor, and Europe and Japan have trade surpluses. So they're in different situations than the United States. But what they share with the United States is they have enormous debt relative to the size of their economies, and both of these countries are going to have to deal with a lot of disruptions when that debt service becomes, too big a burden on their economies. I mean, right now Japan is trying to fight that, but for years Japan got away, and to an extent Europe too. The artificially low interest rates were supposedly a cure to the non-existent problem of there not being enough inflation. That's what they were always hiding behind. Go back to Abenomics and all this nonsense. Japan's inflation rate is too low. That's the problem that this monetary policy is designed to solve. Well, after several years of extremely high inflation, which is going to happen. I mean, inflation is not just temporarily here. We've been having inflation for better than a decade. It's called quantitative easing. It's not like it just showed up out of left field. It just initially showed up more in asset prices. But the entire time I was warning that eventually it would end up in consumer good prices, and that's where it's going to stay. And so we're going to be looking at extremely high rates of inflation for many, many years. This is not going away. This is here permanently. And so at some point, the Japanese electorate, Europeans, there is going to be a big push. We can't live with this kind of inflation. Something has to be done. And so at that point, they do have to make a decision. Are they going to have, runaway inflation, or are they going to let rates go up, shrink money supply, and deal with that problem? Bankruptcies, and all that would be healthy, because you have a lot of companies that should go out of business that are being propped up. I mean, economies are misallocated. There's a lot of problems that governments create when they create inflation and artificially suppress interest rates. And so those problems need to be resolved. But I just think that the United States is in a worse position to try to deal with the alternative of fighting inflation, given the nature of our economy, this huge bubble service sector economy that's built on deficit spending and trade deficits, budget deficits, a service sector economy that's predicated on the rest of the world supplying us with the goods that we can't produce. And I do think that one of the things that's going to change with this massive inflation is I do believe there is going to be a new economic order. I think that the economies of the world are going to recognize that the system we have now, where everybody's fiat currency is backed by another fiat currency, is going to come to an end. I mean, just like, you saw they tried to back that stable coin, what was it, Terra Luna. Yeah, they said it was stable, but it wasn't backed by anything but some other crypto. So what was backing that crypto? Nothing. So you have dollars, euros backed by dollars. Well, what backs the dollar? Nothing. So it doesn't work. So I do think that we're going to go back to an economic order where gold is the primary reserve asset, and the euro's backed by gold, the yen's backed by gold, the dollar, those are the primary reserves. Everybody has an asset, a monetary asset that isn't somebody else's liability. And no one has this exorbitant privilege of being able to create a reserve currency out of thin air and just live off the productivity of everybody else. But when we make that transition, the United States is the least able to withstand it, because we have been the primary beneficiary of the economic order that we have today. And when that changes and the United States can no longer do this, when we have to go back to a saving production economy where we can't consume unless we produce, and nobody can borrow unless somebody else saves, that is a major transition. And I don't even see how we undertake it, especially in the political environment that we're in, the popularity of big government and socialism, how we're going to dismantle enough government to even allow this to happen. And now when you have so many people demanding, we want less inflation, they don't realize that that's impossible unless we have less government, because inflation is how we're paying for government. And so the only way to let the middle class off the hook on inflation is to let them off the hook on government, which means we have to slash Social Security, Medicare, Obamacare, defense. No one's willing to do that. Alternatively, they can dramatically raise taxes on the middle class. No one's going to do that either. So we just have this unique problem, I think the severity of it, that I think the dollar just has a profound decline. But I think the emerging economies are going to end up in a much better shape. The ones that have been more productive and have saved more and produced more and exported more. I think they're in much better position than the advanced economies to come out really, really winners on the other side of this.
Right. So it's interesting because if we're sizing the countries up as like two football teams or basketball teams, I guess it's the NBA finals time right now, you're just looking at strengths and weaknesses. And it sounds like, from Peter's position, the strength of Japan and Europe is that they produce more than they consume. And then the strength of the United States is the dollar is the reserve currency. So it comes down to an argument of which one is going to win out, is going to actually win the game. Which strength is going to prevail in the short term? Because I think in the long term, both of you would agree that all fiat currencies will go down, and you're going to have to, we'll call it, reset the system, and it most likely will be backed by gold or something that people have confidence in. So do you see the argument kind of distilled down to that level, Brent, where it's just about produce, consume, or dollar reserve currency?
Well, I think there's more to the argument than that. Again, I don't disagree to the argument that Peter is making if we lived in a free market. If we lived in a free market, Peter does a great job of explaining the fundamentals and why things would play out that way. But we don't live in a free market. We just don't. And so Peter hasn't talked anything about the military aspect of the United States and their ability to enforce their will on some of these smaller countries. Now, maybe they can't enforce their will on countries as easily like China or Russia or some of the other big major countries, but some of these smaller emerging market countries who currently rely on the United States to export their surpluses into and who have huge dollar debts need dollar funding to keep operating until that new reset system comes about. And until that new reset system comes about, they're hooked on the dollar. They might not like it, but they are. They're just like a junkie on heroin. They can't get away from the dollar. That's what they use. The other thing I would say is a lot of these surplus markets that Peter talks about, I agree, they do have surplus markets. But the reason they have surplus markets is there's two big markets that they sell into. One of them is China, and the other one's the United States. And the United States is either every other country's number one or number two biggest client. I don't know which one, but they're one of the two. And I don't know too many businesses that can survive if they lose their one or two biggest clients, or without having severe impairment, right? And so we already know China has trouble. They're having to ease monetary conditions already because they've got gross malinvestment. They've got huge real estate bubble. They're no longer getting dollars. The dollars that can leave are leaving. There's political unrest between these two different warring factions in China. Xi is still in control, but he's starting to be challenged. And so, they can probably not buy as much as, if they go into a recession, they're not going to be able to buy as much as these surplus countries' goods. If we go into a bigger recession, we're not going to be able to buy any of these, these surplus goods. And so those countries that are selling those surplus goods are not going to be selling them, and they're not going to have the surpluses to the same extent that they have now. And all those countries have huge debts. So they are not going to go, like I said, there's not going to be a situation where the United States goes into a massive recession and the rest of the world is fine. That's just not going to happen.